This is the second part of our chapter conducting the assurance engagement. In the last part, we talked about the first two steps of the planning phase, which was first determine the engagement objective and scope, and then understanding the auditee. Now we will move on to the third step. The third step is identifying and assessing risk. We go through this steps on chapter 5, and this is step and actually the following two steps. So identifying and assessing risk. After the internal auditor understand the auditee and identify the KPIs, understand the objectives of the auditee, he start now to be able to identify the risks surrounding that auditee. And this is the first step of assessing the risk. First, we need to identify the risk, and then we will be able to identify or assessing the risk. Examples, we have used the cash disbursement process in this chapter as our example. So these two scenarios we could identify in any cash disbursement process. First, a duplicate payment. So there is a risk that we will pay 2 times the same invoice. So we call it a double payment. So it's made up. Why the double payment could happen? Due to the invoice being inputted twice. So the invoice, like for example, it has been inputted twice, or has been, for example, sent through 2 different ways, and we receive it, and we didn't notice that it's the same invoice. So the organization paid twice for the same services or for the same goods. This is one risk. And also another risk surrounding cash disbursement process could be invoice are not processed timely. So we lose an invoice, we didn't pay it, even if we have the amount of that invoice. So there is a risk that the invoices are not processed timely, and the payment may pass the due date. Then after we identify the risk scenario, we need to define these. What do we mean by define the process risk? We mean after we identify it, we know or try to define the cause effect. What might cause such a risk, and what's the effect of that risk? So duplicate payment, failure to identify. If we fail to identify multiple inputs, we recognize that there is 2 invoice for the same goods has been inputs, may result in a duplicate payment to vendor. The outcome, it's that we will not be able to undetect it or prove difficult to collect. Even if we detect it, it will be hard to collect it. This is how we define the first risk. The second risk, how we might define it, it's initially inability to process a payment on time. And inability to process a payment on time, this is the cause. The effect of it may result in what? In fines. So if we are late to pay, we might have fines or penalty, or we might even lose our relationship with the vendor. So there is many effects that might happen if we are late to pay. So fines, penalties, losing a vendor relationship, or even we miss a discount. So it's lastly, it's important to ensure that there is a correlation between each risk that we have identified and the process level objective. So we need to link these with the objective we have identify in the second step when we try to understand the audit. So after we identify and define the process level risk, we need to evaluate the impact and likelihood, and we have covered that. First, we determined what the outcomes of the risk if it's happened, and what is the likelihood to that risk to occur. And finally, we combine these two in a risk matrix so that will show us the interrelationship between the impact and likelihood of each risk. Lastly, in identifying and assessing risk steps, we need to understand the management risk tolerance. And in this part, we need also to understand that there is something called risk appetite and there is something risk tolerance. We have already covered that. The risk appetite is one and for the whole organization. However, the risk appetite, it's for each process or each sub-process. And it's good to mention that it's common that the organization or the management will have different level of risk tolerance. What does that mean? In that process, for example, the risk tolerance for cash disbursement may be higher than any other processes because of the inherent risk of that process. So it's happened that we might have high risk tolerance in some process and medium in others and low in others. So this is the third step, which is identifying and assessing risk. Now, after we have identified and assessed risk for the auditee, we need to understand the key controls. The key controls could be the most common key controls, these four: approving, examining, matching, segregations. These are the most common key controls that we might, any internal auditors might recognize in the auditing. So so here it says key controls. This is mean that we need not to identify all the controls. Now we need to focus on the key controls. Examples, as I said, approving, examining, segregation. What does approving mean? For example, the vendor approve list. So this is one way to control. Examining mean involving verifying an attribute that is data element, event, or documentary event supporting existing or occurrence. So examining, that mean we have the auditee have a control that he examined the invoice before he process a payment for that invoice, or we need to have an invoice that we have to have an invoice before we pay. This is could be an example of examining control. Matching means initial making a comparison between two different attributes to verify them. Matching, for example, we match the payment on our records and with the bank record. So this could be way of control. Also, segregation, we have covered it earlier. The segregation is one way of having a control. What does segregation means? We separate duties, and we have listed these three, that the segregation will separate having the assets and the one who will record the transaction and the one who will process or who will initial the transaction. So this is identifying key controls. It's good to use this while doing the while identifying the key controls. This matrix is a good way. We list the process level risk, and here we list the key controls of that risk. So for example, risk A, we define it, and then on risk A, what are the key controls that mitigate the risk for this risk, so control A, control B, control C, for example. And then we will tell about the internal auditors, tell his opinion about the design adequacy of these controls. There are no checklists to formulate or to provide the internal auditors with the absolute information about controls for the auditing. However, it require judgmental. Identifying the key controls is a judgmental process that can be accomplished by the internal auditors when he answers these questions. So for the internal auditors to identify the key controls, he could use these questions to help him identify the key controls. What are these questions? The first one is if that control is not performed as designed, is the process will achieve its objectives or not? If he answers these questions, that will help him to identify if that control is a key or not. The final task in this step is assessing the risk and identifying the key controls is to link the process level control to the process level risk, which is used here. So we need to link the controls the internal auditors identify with the risk, and this is a good matrix to use for that. Then the following steps after the internal auditor identify the key controls, he needs to evaluate the adequacy of the key control design, as we see here in the matrix. So the key to this steps is determine if the key control is design adequate or not. Once the internal auditors has completed the design adequacy evaluation, if he thinks there is any gaps, he needs to discuss it with the management and document that as an observation. The individual observation and the overall evaluation that will influence the nature, the extent, and the time to test to be performed. So when he evaluates that design, the internal auditors, when he evaluates the design adequacy, his result of that evaluation will affect how he will test it, or how his test will be performed. Okay. Then he creates a test plan after he evaluates the design adequacy. The test plan it's based on the understanding gained from the previous steps. So he cannot have the test plan if he doesn't understand the objectives of the auditees. He did not understand the KPI for the auditee. He doesn't know what's the high risk, what's the moderate risk, and what is the low risk, and he doesn't know anything about the key controls. That will not help an internal auditor to do a successful test plan. So based on the previous steps and understanding he gained from these steps, he could plan or make the test plan. Why? Because now the internal auditors is prepared to determine which control are important enough to test. He now is ready to develop an approach for the testing. What is the nature of the test? What is the extent of the test? What is the timing of the test to be performed? And also now the internal auditors is ready to document the judgment and document judgment supporting the chosen audit test. So he now the internal auditors will be able to support why he chose this way instead of the other way to conduct his audit test. Now after creating a test plan, the internal auditors will develop a work program. What do we mean by a work program? A work program is a document this document lists the procedures to be followed during an engagement. Also, the work plan design, the work program design to achieve the engagement plan. Okay, it's the work program. It's like a tool that the internal auditors use it with the engagement plan to formulate or to conduct his internal audit function. The key point that must be or the key point is that there is must be means of first one, ensuring all engagement team members understand what has been done and what is still need to be done. What does that mean? That means when the internal auditors, and especially the chief audit executive, who is like the big boss in the internal audit team, must design the work program in a way that in each point of time, everyone in the engagement, everyone in the team, and the internal audit team, understand what has been done, and also what needs to be done. So what has been done in the past and what will need to be done in the future. Also, he designed the work program in a way that communicate the responsibilities for performing engagement tasks. So the work program must specify the responsibility over the teams. It doesn't give the responsibility for the whole team and doesn't separate the responsibility. No, the responsibility for the specific task must be assigned in the work program. Also, the work program need to provide a record of which tasks are completed. So the design of the work program need to provide a record that the internal audit team use it to keep the tasks that are completed and the information about tasks that has been completed. Lastly, the work program facilitate a review. The work program must be designed that will facilitate a review in anyone who want to supervise, even the chief audit executive, when he want to supervise his team, the work program will be a good way to have a review over what has been done. After that, after creating the test plan and then developing a work program, we will reach the last step on the planning, which is allocate the resources to the engagement. So at this point, we know what we're going to do or what the internal audit team will do, and in which time. So now we need to allocate, since now we know what we are going to do. Now we are able to allocate the resources that will enable us to do the plan. So allocating the resources is the last step of the planning phase. What must be considered in that step is first is estimating or budgeting the resources that are needed financially. So we need to have a budget. The budget need to be prepared that contains number, for example, number of hours we needed to complete, as well as the finance cost. For example, do we need a travel cost? If the engagement is happening in somewhere else or in two locations, do we need a travel cost? Do we need technology cost? For example, does the auditee, the nature of auditee activities need some different technology that we didn't have it? So we need to pay for license and such and any technology cost for that, as well as supplies. Do we need special supplies that is not non-routine supplies? For example, steel toe shoes. For example, if you want to examine some inventory or make an observation for some inventory that need special clothing to enter that inventory. So these costs must be considered before we move to the second plan. So in the last step of the planning is allocating the resource to the engagement. Also, we need to allocate the appropriate human resources to the engagement. So it's most important. The allocating the human resources is the most important and most challenge task. So do we have the skills we need? Are our teams have the skills we needed? Do our team need some development, professional development? What our team have experience, and what does the engagement require, and does that match? If there is a skills that is required to that engagement and our team doesn't have such an engagement, how we're going like to solve this? Are we going to hire someone or just outsourcing to obtain such an experience? And that must be also consider the budget that we have. So this is the second point that we need to consider in allocating the resource of the engagement. Also, we need to consider the scheduling the resources. So the budgeting, the human resources, we need to have a schedule that is these related to time. For example, the supplies. When we are now going to need the supplies, is it in the first month, the second month, when? For example, the travel cost. Do we need it each month? In which day of the month? So when we have it or when we need it, we will be able to have it. Also, the human resources. If we are going to hire someone that is not in the team, or if we are going to outsource, when he need to be available. Also, the manager. The manager, for example, if the manager need to take a vacation, we need to make sure when he take the vacation, someone covers for him, and also he doesn't take a vacation in a critical time. So these three subjects need to be considered when allocating the resources to the engagement. So here in a short way, it says that you need to consider the availability of key process personnel, the availability of the engagement resources, the availability of outside resources, and the availability of the key review. Once we have allocate and schedule the resources, we can now conduct or start performing the engagement. Now we will move to the performing phase. In the performing phase, if you recall, it has 3 steps. The first step is conducting the test that we create here, evaluate the evidence we have gathered in this step to reach a conclusion, and lastly, based on this, we need to develop an observation and formulate the recommendation. So let's start to discuss these 3 steps. First, conducting a test to gather the information. At this point, the assurance engagement translation from our move from planning phase to the performing phase. The testing approach developed in the planning phase and outlined in the risk and control matrix must now be executed to determine whether the control are operating as designed. So if you look to this matrix, we to use this matrix to make sure that here these controls are operating as they are designed. Okay, so now must be these control, we need to evaluate the effectiveness of this control. The result of that test can be documented in the risk and control matrix. In some circumstances, the result of testing may include a potential gap or issue. What does that mean? Sometimes when we plan for testing, we will plan it because we have some expectation of what we are going to face. However, our expectation not always right. Sometimes we have a gap or issues that we didn't expect it. That doesn't mean that we still have to stick with our plan. That means that we can change the plan or do additional, for example, do additional testing or reverse some of the testing approach to the goal is be able to reach the necessary conclusion that are we'll discuss it in the following section. So the test plan, if we face something that we didn't expect, that doesn't mean that we still have to follow the test plan we have done, the internal audit have created before. No, we have the flexibility to reverse or do some additional testing that we haven't planned. The main goal is to reach the necessary conclusion. The next step is evaluate the evidence gathered and reach a conclusion. Conducting the audit test allows the internal auditors to gather evidence that he or she needs to evaluate the design adequacy and operating effectiveness of the key controls. So he can reach a conclusion about if these controls are effective or not. These following equations will the internal auditors need to answer them depending on the charter of the internal audit function and also depending on the objective of the engagement and the expectation of the auditee and other internal stakeholders. What are these questions? These questions, first one, are the key controls are designed adequately? And then, are the key controls operate effectively as they are designed to operate? So to reach the conclusion, we need to answer these two. The third questions, are the underlying risk being mitigated to be acceptable level? So first the design adequately and then operating effectively. This covered in the planning and this is covered in the conducting, which is the test plan, and conducting the test plan. And then here lastly, after this, is the risk is mitigated to the acceptable level. Last questions of overall, do the design and operating of the key control support achieving the objectives of the process or area under review? So after we evaluate the controls, we need to answer is the process is working to reach its objectives or not. Okay, then we will move to the last step of the performance phase is to develop observation and formulate communication. This is the last step. After we complete the testing and we gather and evaluate the evidence needed and reaching conclusion, the internal auditors must develop the observation and formulate the recommendation that should be communicated to the auditee and other internal stakeholders. What do we mean by an observation? The observation is a finding, or we could say a determination, or we could say a judgment derived from the internal auditor test result. So after the internal auditors conduct the test, he will have a result, and based on that result, the internal auditors will form an observation. This is an example of an observation an internal auditors might formulate when in the last step of the performing phase. In our example, the cash disbursement example, we might have condition, criteria, cause and effect for one observation. This is all a one observation. What is the condition? The condition is that there is no check with user to determine whether any goods or services have been received but not invoiced yet. So based on the internal audit result, the internal auditors observe that there is no check, that the cash disbursement process doesn't have this step that he check with the users, and so he can the process can determine whether the good or services have been received but not invoiced yet. So there is no checking in the process that can explore or find out if the goods are received. There is good, we have received it, but we haven't invoiced it yet. The criteria of that condition that all good received for which title has passed to the company or services which have been rendered should be recorded in the financial statement. So this is the criteria that this condition will have. What the cause of that condition? The cause of that condition that the account payable management had not previously considered or recognized the value of performing such a check. So the cause of this condition, what caused it? It caused by the account payable management. He doesn't do the check between to recognize because he doesn't recognize the value of performing the check. What the effect of that condition? The effect of that condition is unrecorded liabilities. If we receive good but we haven't invoiced it yet, or we haven't received the invoice yet, we will not record it as liabilities. So we will have our liabilities unrecorded. Along with that is corresponding unrecorded assets or expenses may result with the book are closed at the month or a quarter or the year end. So the effect of that condition, we might have unrecorded liability at the end of the month or at the end of the quarter or at the end of the year. In any of our financial statement that we have, we might have unrecorded liabilities. So the liabilities will be underestimated, and also we will have unrecorded assets, and our assets will not be accurate and might be underestimated. This is the end of our second part of our chapter. I hope you enjoy it and take care.